Weekly Auto, guys, welcome back. It's Saturday. We're trading on the 15th of March. This week, wow, an interesting one. Equities started a potential chance to find upside momentum again. Cryptos is worth a look or worth taking a look at. And Trump policies, will they fall back? Will they cause further issues? Is what exactly we want to find out as well in this upcoming week, where central bank information obviously kind of at the forefront, look at important news in markets. So welcome back, FX Strategies Outlook. Any comments, leave them below the video, and please don't forget to subscribe to our channel as usual. The news this upcoming week are kind of really important because the federal funds rate is the most important story. Obviously, kind of, will the Fed adjust rates somewhat? We might say not quite. The question obviously kind of remains the same one. 4.5%, that's the expectation. Why and what could move market motivation? The US dollar had been extremely weak, and the weakness is due to continue. Let's examine the charting patterns. The euro dollar, based on the daily chart, has been moving to higher levels. The market, though, started to basically find slight resistance area. On weekly charts, we saw that the upside potential kind of really increasing here. That's at least around the 50 moving average, which has been rising again. And the upside momentum is due to potentially continue 112 technical resistance pattern. Might be the zone which is worth a consideration here. However, monthly charting figure, we are now about to get stuck at that resistance area. Now, that's where I drove in, marked in the trend line here, 50 moving average 109, 110, really being kind of the important zoned line in the sand. Back in the days, basically, we've seen the market kind of rushing to higher levels. There was another push again towards the upside. However, what I might expect is that the days in March, the first 2 weeks so far, we've been rising. We might see some slight retracement lower. The market motivation might weaken somewhat to then see this upside potential going to continue, and with that, obviously, kind of the mixed momentum might be the important one. Do we have any reasons to believe that the US dollar is gearing up some momentum? Not quite. Would we see that the US dollar is going to face a potential rate cut? Not quite during the March meeting. Maybe later on, the second half of the year. I might say the Federal Reserve is in no rush to cut rates even further. If the Fed is going to wait and say maybe, hey guys, we want to cut rates maybe only once this year, this could be one of the reasons which could drive the euro-dollar currency pair back to the downside, which might offer then some entry opportunities at lower levels. So what's the story now? The Fed is going to cut rates this week? Not quite. Or this upcoming week? Not quite. The euro dollar hence will weaken further, and down at the 107, 107.50 area, we might start to buy into the market, causing the euro dollar to weaken first where we enter, and then maybe the upside potential would be ready to continue. Same story with the pound US dollar, the cable currency pairs, it's called, might indeed strengthen further. We've driven through and beyond the technical 50 moving average resistance zone, and the upside potential is going to be due to continue as well, with upside momentum in the pound US dollar may be ready to celebrate upside, but another retracement lower Monday, Tuesday, say Wednesday, maybe lower, with the Federal Reserve causing a peak in the dollar, causing a weakening in this cable currency pair, and then Thursday, Friday next week, maybe the market is going to rise further. I don't know exactly what's going to happen, but with the motivation of a potential weaker price sentiment just driven by the Federal Reserve, this is what might make sense somehow further. Looking at gold prices, they've been driving much higher this last week so far. Gold topped out near the 3,000 US dollar psychological price range, and the gold price is just projected to potentially to rise somehow as well. We have the big story in financial markets, shaky stock markets. We'll come to this in a second, but the gold price signals that investors maybe know something more than compared to what we know, or investors and traders alike are preparing to see a gradual shift in markets, which seems to be underway. By the way, if we're listening to JP Morgan, Bank of America, they expect as well the bloodbath in stock markets to continue. That aside, gold is now the upcoming story here. Do we have any technical resistance pattern? Not quite. Can we drive and use Fibonacci extensions? We can. Those show that the 2,800 level, taking into consideration the recent breakout here to this recent retracement, right? So the push to the upside, the break to the lower area, and then we have had the breakout to higher levels. And this is exactly where the market had topped already the 2,800 US dollar price range here. Now, this zone could be of interest to us, and this zone could kind of offer a potential retracement support. If the market starts to weaken, we might say the 2,795 US dollar level is potentially not a perfect, but is a level where we might enter again to see the market potentially rising without kind of throughout next week. Silver, something similar. Silver prices have already as well pushed themselves back to higher levels. The silver market did not do what I expected in between. Left shoulder had maybe right shoulder here, but last month, basically the February high has been extended to the upside, and hence with that, we might say the upside motivation is kind of still quite interesting here. Now, the market motivation in silver looks set to strengthen further. Next line in the sand would be 35.80. Then we have the 37.50. And then we have the 41 plus way higher levels. Is silver gonna strengthen further? Yeah, US dollar weakness is driving these markets like all of the other markets, and that's the key takeaway for our market momentum at the moment. Dollar weakness driving the euro higher, obviously. The pound moving into the upside. Silver and gold are pushed back to upside areas. And now stock markets. How do equities react to the current price sentiment as we see it? Looking at the S&P 500, now the market weakened fairly recently. Looking at it from that perspective, now the S&P 500 is starting to appreciate. We have overextended previous low price points here. Let's take a look into the upside areas here. A recent retracement, long-term retracement, basically 2 years ago, 2022, finds and shows us the bit of a bottoming out area here. If we take into consideration this recent the recent all-time high, we have the 100% FIB retracement level. But looking at it in terms of recent and upcoming support areas, this market might kind of be quite interesting. The 50% Fibonacci retracement, that's sitting at 4,850, say, coincides as a nice support area with the recent resistance at October-December 2021. There we go. This is a nice area of engagement, of support. Should the market start to depreciate, should the market continue, as JP Morgan, as other banks, like Bank of America, expect, we might say this could be an utmost low. Will the markets weaken further? S&P 500, Nasdaq as well? I might say not extremely likely, but if we face a further recession in the US, then we see that there's further room of engagement towards lower price levels. So what does it mean for us traders? Now, the next couple of trading days, maybe towards the end of March, might cause the market to rise, somewhat at least, to then see the markets to fall again here based on recent candlestick patterns. I might say, and that's my upfront perspective for this year, we see something which we've seen 2022 basically here. I would rather see shaky markets ending lower with shaky Trump policies. We have tariffs kind of harming the potential economy, and that's really kind of leading towards price increases. Recent price data caused the market momentum to basically be of some sort of impact, not as much, but that's at least on the forefront of what we might expect in the next couple of trading weeks ahead. Medium term, I might say still the equity side of things would kind of be interested to observe, but the valuations is the story. We have overvalued companies in the US, we have still undervalued companies in Europe, and now, by the way, guys, we can fast forward, move towards the German index, the German DAX. It is not really moving lower. Instead, the German index kind of continues pushing higher only if European markets, only if American markets will weaken further. I see also German and European markets to weaken further. If we see that the US market is going to kind of remain in a sideways pattern, we might say this could amplify the German market to move even higher. Plus China, the Hong Kong index, China A50 somewhat, but also tech companies from China, so much undervalued. They have so much room to higher price levels potentially, which could cause the upside in markets to be interesting here, which could cause as well the German DAX potentially as well. So Europe, Eurostox higher, Hang Seng Tech Index, Alibaba, BYD moving to higher levels already, and that's exactly how I see the trend to potentially continue in the next couple of trading days. This coming week, we have important data as well. Looking at CPI data, those are important from Canada. If we are looking at the economic calendar, we can observe that data from Canada might move markets. CPI here, quite interesting here so far, expected to maybe rise on a monthly basis. And one of the stories, tariffs again. Tariffs, Canada, Mexico, the US, but initiated tariffs from the US towards or over Canada might tell us the story. We can see this here, consumer price index subject to obviously a consideration here might move the market motivation. We shall look in a minute towards and at the Canadian dollar. Plus, looking at end of next week, retail sales, not really something important as it's a backward looking indicator, might give us further momentum in this case. Let's start with the Canadian dollar now, because the loonie has weakened substantially, but fairly recently starting to appreciate slightly. EURUSD all the way to the upside is still projected to move higher. The market having moved to way higher levels, but now we might see there is potential chances for this market to initially weaken, and this comes by and from this resistance technical trend line 158. The market weakness might initially continue. First of all, the dollar CAD already started to weaken since the Canadian dollar obviously kind of gearing up steam against a weakening US dollar. From a technical point of view here, it's just a messy looking chart. And again, I really remember and remain with the same approach here. The market motivation in this case would only kind of be applicable 145 to the upside plus 148 above the high point here might be one of the reasons why the market is going to strengthen potentially somehow further. That's the dollar CAD, that's the euro CAD, and the other markets we expect to move on further. What else is due upcoming week? We have quite a few other remaining news. We have something which we've not taken into consideration for quite a long time, and that's the Swiss franc. If we're looking at the news calendar, the Swiss franc is going to face an interest rates decision. The important news here coming out on Thursday. Whether there's going to be a big change is the question. A rate cut will be expected. Is that going to weaken the Swiss franc? Yeah, it could. It could as well, because the dollar against the Swiss franc had obviously kind of moved a fair bit. Technicals, weekly chart, pointing to further weakness here below the low point here, 0.87 could actually strengthen the Swiss franc against the US dollar. Based on this long-term trend line, that's kind of quite the interesting point, all the way to the upside. Resistance, we have some support and we have some new support. So we would have kind of two lines of engagement here as supportive trend lines back at lower levels, 0.86, 0.84 those low points, those lower trend lines might indeed act if the market kind of weakens somehow further as supportive trend lines here, and then the market might kind of itself push back to the upside again if those trend lines make sense. It depends on how it goes. Here, first of all, so these lower zones here, we've seen this zigzag pattern. Is that going to continue? Usually when market participants and traders expect the same to happen, it's usually not going to happen. In this case, we might say that's a trend line play at least, and this trend line play is at least something we could take into consideration. Now, I said rate cut would actually cause the market to potentially weaken. Is that enough to justify the market momentum to the upside at this area already, 0.89? Yeah, could be a case as well. If just the 50 moving average will break to the upside, we might see the market momentum continuing to higher levels. So dollar Swissy kind of being at an interesting level as well, where the market might be kind of important and worth taking a look and taking into consideration those moves. What else goes this week? Well, we have quite some data as well, quite a bit of data. Bank of Japan, as usual, tentative timing on Wednesday. I might not say that there's a lot to be expected in this market yet. Looking at it from the dollar against the Japanese yen's perspective, we had already kind of moved lower as well. So that line in the sand might be dragged to the downside. 147.50. If the market weakens, we could see that there is further room here to lower price levels. So far, it really doesn't give us anything of further information. So far here, the weakness looks set, but that's kind of really impacted by the greenback, by the US dollar weakness. Looking at it from the euro against the Japanese yen's perspective, the upside looks set to break the high point here, and that's the part of the game here. Medium term, long term market movement here with a break of the support area did not happen in the past, say basically 2 weeks. 155 wasn't broken. That's the line which I saw as important here. Now we just are back up and running with the opposite side. So Japanese yen's weakness here up and running. If we really can break the high point sustainably, and if the market doesn't do what it did before here, fading, resistance fading, and maybe another fading here, we might see upsides to continue. So long story short, if the line of the sand is broken here, and that's the 162.50, I might go long. If the market breaks the downside here, which is basically just last week's or this week's candlestick here, 160.15, the market might start to weaken, causing potentially a further escalation to lower price levels, the 160.15 area being obviously kind of quite important and interesting here for falling prices. Pound against the Japanese yen, by the way, similar picture. There's not big of a different story here. Trend line would make sense, and again, the upside here, if broken, kind of would tell us that the upside momentum might increase. 193.20 is the line here and with the pound against the Japanese yen. Crypto markets, now they are open as well today, Saturday, and tomorrow, Sunday. Crypto markets started a bit of an increase in momentum. Bitcoin is slightly higher, and we shall start with that chart, taking it into consideration. Now, crypto is following US tech. US tech companies, yeah, still shaky. Magnificent 7, obviously kind of on the way to weaken further. If we believe exactly what the Bank of America stated beforehand, tech in the US might weaken, and then also subsequently the crypto markets might weaken further. So Bitcoin, and look at it here, looking set to strengthen slightly should the market respect this 50 moving average. That's the zone here, 77,700. However, on and based off this monthly charting pattern, another weaker price momentum is what I would see is feasible. So short term, slightly higher, maybe on the weekly. Medium term, lower prices towards the 60,000 level. Imagine and remember as well what I said. And this year I expect it to weaken. Doesn't need to be the kind of in place in the end, but the market motivation here with downside momentum kind of being the key takeaway. Looking at Ethereum, we see that the market hasn't been stopping. Ethereum kind of weakening as well. So below the 50 moving average, downside might increase. XRP, Ripple is kind of interesting here. At the moment, out of my short positioning here, I would enter again below 210. I would enter and let's see how the month goes. Again, this is like a nice amplification of the recent market momentum, slightly stronger to then see the market weakening at lower price levels. Solana does the same story. Solana is about to strengthen off the cliff of this 50 moving average, and with that Solana might lead the way to upside prices, of course, as well. So guys, now we got that sorted. The question is this week, what do we gonna focus on? We have the Federal Reserve, with an important news release, and that's gonna be the important story we face here right now. We have further market motivation, which is obviously also up and running from other central banks, the Swiss National Bank being one of the important ones, and obviously Bank of Japan plus other minor data. Please leave your comments under the video. Looking forward to get you on our page as well, and see you then. Take care, guys, and next week another new video out of our new video series. So stay tuned and just subscribe to our channel to not miss any updates in this case. Take care, happy trading, see you then, bye.